Hi, so what I want to do now is go over using QuickBooks when you're doing flips. If you've already played around with the class system or you already took a look at the class system for rental properties that I showed you earlier, you're way ahead of the game. This is a little simpler than when you're dealing with rental properties. So there are a couple of ways of doing it. In all cases, you want to set up the property on the balance sheet. Now, in the past, I've done it a couple of ways. When I first started, I found that it became a little too cumbersome on the balance sheet to try to include everything. Then I pared it down to the property title, and then underneath that I had holding cost or purchase cost, holding costs, selling costs, and rehab costs. You don't need to put all of that on the balance sheet. We can just put the name of the property, the address of the property on the balance sheet, and use our class system to include all the expenses in a breakdown as much as you want to break it down. I choose to break it down by purchasing costs, holding costs, selling costs, and rehab costs. So then what we do is all of that is actually part of the balance sheet because it's an asset that you're dealing with and improving the asset. Then when we sell it, we move all of that over to the income statement as a cost of goods sold. So let's say, as an example, you sell a property for $200,000. That's your revenue, all right, $200,000. Your cost of goods sold is the culmination of the purchase, rehab, holding, and sale of that property. So that might be $150,000. So on your income statement, you'll have $200,000 sale of 45 Maple Street, cost of sale 45 Maple Street, $150, net profit net from sale of 45 Maple Street is $50,000. Then below that, you have all of your administrative costs that you have for running your business, what maybe mailings and office equipment and things like that that are general that could apply to any property that you picked up. So anyway, let's go through this and set it up so that you see really what I'm talking about. Okay, so what we want to do is go into the company chart of accounts, and we want to add a new account, and we're going to call it this is a fixed asset because it's the property, and we're going to call it, I'm going to call it 45 Maple. Okay, so that gives us what we want on the fixed asset side of the balance sheet. So under our lists, let's take a look at what I've already put in here for class. I've got holding costs. I did this to save some time. I already put in under holding costs, insurance, loan, interest, taxes, utilities, purchase, attorney, taxes. There could be other things in there. Rehab, I've got a bunch of rehab things, and then that will give us all of our classes so that we can actually pull up a report broken down by class to show us everything that we've got. All right. So off camera, what I did is I added some more classes. I made some accounting entries. I fixed the income statement so that it would show the way I wanted it to. So when you bring up reports and stuff, the information is there, and sometimes you don't like the presentation, so you could go back and kind of manipulate the chart of accounts to make it show it, make the reports show the way you want it to. Let me just give you an example before I get into the accounting aspect of it. So if I pull up reports, company financials, profit and loss, this is after I did 45 Maple Street. I put in a bunch of entries, and then I sold it off with the entries so that it would just take me too much time to show you everything there, but I'm going to go back and identify the entries I made. So here we got a report. I want to go back a couple of months because I didn't make any. I made entries earlier in the year. So here's a report on profit and loss. Basic profit and loss. So the way I set it up was that I could show that the property, 45 Maple Street, sold it for $200,000. Cost of goods sold, 45 Maple Street, $42,125. It comes up to the total sale of property, $157,875. All right, so I didn't add in any other general expenses like rent for an office and office supplies, things like that. But all of that would fall below the gross profit line and into the general expenses. But let me also show you the reports by class, profit and loss by class. Here you see 45 Maple Street. As we brought it over into the revenue side, we had to clear out all of those classes that we had. It's still there if you need to go back and look at how much did I spend for holding, how much did I spend for rehab. But where it is now, the way I brought it over to clear it out was I just brought over the total cost of all of those expenses to show it under cost of goods sold. So let's take a look at the balance sheet for a minute. And again, once you get used to this stuff, if you're going to use QuickBooks, you will see, you'll be able to show things in there using the class system the way you want. You may not want all of this detail. If you're flipping 30 houses a year, you may not want to know on each house what it's costing for each thing. You may want to just lump it all together. However you want to do it is fine, but I chose to show you more detailed way so that you can see specifically, if you want, on each house what the cost is going to be. So here we've got the general balance sheet. Now I'm going to go in and show you balance sheet by class. All right, so now you can see on the balance sheet, if you look here, 45 Maple, we can go all the way across, and utilities, which is under holding, total holding, attorney fees for purchase, building purchase, $30,000 total purchase, demolition and clean out, $3,000, roofing, $7,500, total rehab. So obviously I didn't put everything in. And then over here we've got the total for 45 Maple. So that's on your balance sheet, because everything that we're doing improves the asset. Then when we clear it out, we're going to bring it over to the income statement as the cost of goods sold. So now what I want to do is just give you an idea of the entries I made. Okay, so let's go use the register. Okay. So here's some of the entries I made. I opened up with $100,000 in my banking just to have something there and not have to go through showing deposits and everything. I buy the building for $30,000 right here, and it went through attorney ripoff's office. Sorry if I'm offending anybody, but we paid ABC Contractors $3,000 for a clean out. Now, I'm going to just show you here. We're going to split. So you can see here what I did is Here's the payment for clean out. That comes under rehab, demo, and clean out. That was my class that I put it under. And you can see here I added some classes as I was going along to account for other things that would come up. All right, even under revenue, I put 45 Maple. This subcontractor cost was already on my list of classes because the type of account that I picked when I set this up was a contractor account. Okay, so there were already some cost of goods sold accounts and some things like that set up. But here, what I wanted to do, and I'll show you the chart of accounts, was I wanted to make sure I had my class broken down pretty specifically. Again, we're at 45 Maple, and under that I've got holding insurance, or actually 45 Maple sits by itself, but I've got holding insurance under that, loan interest, taxes, utilities. Then I've got my purchase and items under that. Then I got my rehab items under that. So you could break that class down as detailed as you want, or maybe you just want to do rehab, and total, have that as a total rather than each individual thing. Really up to you, as I've said. So let me show you too in the chart of accounts what I did. Company chart of accounts. So here's on my chart of accounts, I am showing there's a major account, sale of property. Under that I put right here 45 Maple, and then the same level, cost of goods sold, 45 Maple. So you got sale of property, 45 Maple, cost of goods sold, 45 Maple. Those are things I added to keep track of 45 Maple itself. And you could do that for under sale of property. You could put 123 Main Street, cost of goods sold, 123 Main Street. Now, in accounting terms, cost of goods sold you set up as a contra account. Although it's categorized as income, it is really opposite of revenue. And we'll look at that again on the financial statements. But I just wanted to show you how this is set up in the chart of accounts, so that when we go back to reports under profit and loss, we can see that because of the way it was set up under the chart of accounts. Let's go back to October 1st and refresh. You can see right here, sale of property, 45 Maple. I sold it for 200. Cost of goods sold, 45 Maple. Cost of my rehab and clean out and holding and sales was 42,125. So my total sale of property is 157. Now you can see here, oh, that's what I made on that property, and that's why I do it this way, so that I can see on each individual property how much money I'm making. And the way it's set up on the balance sheet, again, we're going to go take a look at it, and I just want to show you because of the way, all right, this is a standard balance sheet. It just shows current assets. That's basically all cash because I'm showing you after the fact. So let me go back and show you, let's see what we got for November 30th. No, I can't remember what date I put in there as a sale date. All right, here we've got 45 Maple set up on the balance sheet, and as I added things to that, the amount went up. Let's look at November 5th balance sheet, refresh. Now you could see some of the expenses I had are added into 45 Maple as I made my accounting entries. It's always added in on the asset side because it's improving the property. Okay, so that gives you an idea. What I want to show you now is the financial balance sheet by class, and you're going to see here 45 Maple Street, instead of up here like we saw when I was doing the rental property, and we could certainly show it on top, but if you have multiple properties, you're going to have 45 Maple Street, and each classic that we've set up is going to be shown across with a total at the end. And then you may have 123 Main Street, that'll show up on fixed assets underneath. It'll have the same thing, and we'll put it under that revenue title. All right, so I can't say this enough. I set this up in a lot of detail, and some people it gets confusing. So if you don't want all the individual types of, holding costs, don't put in utilities. Just show everything under holding, everything under purchase, everything under rehab, and do it that way if you want. Even if you just want to show one class of fix-up, holding, fix-up, rehab, holding, fix-up, selling, all as one, that's really up to you. But the thing is, if you get called in for, let's say, an IRS audit, make sure you have all of your receipts and all of the information for each check you cut, each debit you've got on your bank statement. You've got to have backup for it in case you get called in. So I like the detail. It could get cumbersome, as I said, if you're doing a lot of properties at once, but you get the idea. And again, I'm going to go back to the register and show you. These are entries I made as I made checks out to each thing. I showed a class for it, and it all went to the balance sheet because it was adding to the value of the house. So in my general journal entries, I want to show you what I did from that perspective. Go back. Sale of property, cost of goods sold, 45 Maple. I brought all of the expenses that were added into the property, and I knew what they were because I broke it down by class. 42,125 to show the cost of the Maple on the income statement after sale. And then I credited 42,125, which was everything. It shows up as the asset on the balance sheet. And like what I just said about the 42,125, I had it broken down. Well, even if you don't, you're adding everything in on the balance sheet, so your total on the balance sheet for that property ends up being credited out, and the debit goes over to the cost of goods sold on 45 Maple. Okay, so again, this is clearing it off of the balance sheet, 45 Maple. This is putting it on the income statement as a cost of goods sold, and our class is under revenue, 45 Maple. All right, so again, I'm going to show you on the report, profit and loss standard. Now this is a date range, so we've got to go back. I'm going, even though it wasn't in existence September, it'll show it all. All right, so that's your general profit and loss without class, without the class system. It's got a lot of class, but all right, then we're going to profit and loss by class. Let's just see what that looks like from the beginning of the year. So now you have 45 Maple showing up on the class system. All right, and here's the detail again. And if we go to balance sheet, now this is going to be a little different because the balance sheet now is just showing cash because we sold it. But let's go back to November sometime. Let's say the 15th. Let's see what it says. Can't remember the date. I sold it at the end of the month, I think. So here we've got now 45 Maple. There's everything added in for the cost of the purchase and the holding and the rehab. So everything is right there. Anyway, you get the picture now. Make it as detailed as you want or as little detail as you want. But the way I show it is, and I think it is properly done, the way I show it is any expenses I pay for goes on the balance sheet. It improves the asset that you've got. Then when I sell the asset, I take it off the balance sheet, put it on my income statement as a cost of goods sold. So I can net out, I see what my profit or loss is on any particular project that I'm doing. All right, so a little bit confusing maybe, and I think earlier I said that this is not as difficult as the apartment setup, but it depends on how many classes you want to add to this, how much detail you want on each property. It's really up to you and how much you do in the course of a year, let's say. If you're doing 3, 4, 5 flips, personally, I would like to set it up so I know on each individual one what's going on. If you're doing 40 flips a year, maybe you pare it down a little bit so that your statements, at least your class statements, are not so cumbersome. Your other ones probably won't be, but your class statement might be a little cumbersome, so you pare it down. You don't add so many classes to it. I hope this gives you an idea of QuickBooks and how to account for your real estate investing, and we could talk a little more about it. I don't mean to confuse anybody. I just want to show you options here. Okay. Thank you. We will continue.